If I tell you that a company's revenue growth rate is 805%, but the key that determines its future is completely not in the financial report, would you still continue to buy it? Today we will explain clearly the truth about Joby Aviation. Hello everyone, welcome back to Stock Market Breakdown. Today we're breaking down a company that just posted over 800% revenue growth. Its stock up more than 90% this year and trading near $16. So the question is Joby Aviation the future of urban air mobility, or a hype-driven high-risk play? I'll break down its numbers, certification progress, real business model, and the key earnings details most people miss. Let's start with the fundamentals. Joby Aviation is indeed one of the leading players in the entire eVTOL industry. It is the first eVTOL company in the world to obtain airworthiness approval from the U.S. Air Force, and the FAA commercial operating certification has already entered the final critical stage, and it has just completed the first piloted point-to-point flight in the UAE. This is not laboratory testing, nor a concept demonstration, but actually flying the first route inside a densely populated city. But although this progress looks impressive, it does not mean investors can't feel at ease, because the most important barrier in aviation is not technology, it is certification. As long as the FAA does not sign off, this company cannot truly commercialize. Next, look at its business positioning. Joby does not want to sell aircraft. It wants to be an air Uber. Its electric vertical takeoff and landing aircraft can move point to point in a city in just a few minutes, turning commutes that originally required hours into just over 10 minutes, and it has already obtained a Part 135 operating certificate, meaning they will be able to officially carry passengers, set prices, and charge service fees in the future. These all form the foundation of its long-term story, and they are the reason why the market currently holds high expectations for it. So at this point, you will find that Joby's story is really big, and some of it is indeed progressing, not purely hype, but bigger the story, the bigger the blind spots. Next, you must understand the critical hidden signal inside the financial report. In the third quarter, revenue surged 805% to $22.6 million. This number looks like a real takeoff, but when you break down the revenue, you will find that almost all the growth came from one-time projects, the passenger business brought by the Blade acquisition, the project revenue from cooperating with the Air Force Base, and engineering services. These revenues are not sustainable recurring revenues, so 805% does not represent that the business model has already begun to explode. Next, look at expenses. Operating costs increased 30%. R&D, certification, and production all became more expensive, and the integration of Blade also brought additional costs. Burning cash is not surprising for an aviation startup, but cash burn efficiency becomes extremely important. Then there is the loss. Net loss expanded 180%, with a loss of 48 cents per share, far worse than the market's expectation of 18 cents. In other words, revenue looks good, but operating efficiency did not improve. It actually worsened. Regarding cash, the company has nearly $1 billion on its books, and with the recent stock issuance, it will not run out of money in the short term, but whether it can survive until commercialization depends entirely on the FAA certification speed. So from a financial perspective, you will see a very important conclusion. Revenue growth looks good, but it cannot prove that commercialization has begun. What really needs to be watched is certification, cash burn, and whether one-time revenue can be turned into recurring revenue in the future. These are the core factors determining the stock price direction. Let's look at the catalysts. The White House has already included eVTOL into the National Pilot Program, and Joby is one of the first participants. This allows it to begin limited real-world operations before receiving full certification and gather real data. After acquiring Blade, it directly inherited existing urban landing points and user networks without starting from zero. It also became the first company in the world to complete an airport-to-airport eVTOL flight, and Japan's ANA even invited it to publicly demonstrate at the Osaka Expo. The Middle East market has proactively extended cooperation, with Saudi Arabia and Dubai opening testing platforms for Joby's air taxi services. These all show that Joby's global attention is very high, but the risks are equally huge. Its cash burn speed is fast, and losses continue expanding. The final stage of FAA certification is the most difficult and the most delay-prone, and something goes wrong, all progress is forced to stop. Competitor Archer is accelerating, and any situation where the competitor gets ahead first may directly affect Joby's future route layout. Continuous fundraising also means continuous shareholder dilution. So the takeaway is clear. Joby isn't a mature growth stock or a value play. It's an early-stage tech name that depends heavily on FAA progress. Once filings move, the direction will be obvious. At this price, there is upside and risk, so it stays on my watch list. Not a heavy position. Real trends come from certification, cash flow, and partnerships in the chart. What about you? Early opportunity or wait and see? Tell me in the comments. I'm Stock Market Breakdown. See you next time.